if you think of the name of OneAccord, right, the opposite of that is discord. And when you see organizations that are struggling, I find they're in discord, right? There's a lack of alignment in terms of where you're trying to go and sometimes how you do it.
Welcome to the Value Factory Podcast, brought to you by OneAccord. We're all about helping businesses thrive and grow through leadership, strategy, and meaningful impact. Now, whether you're a seasoned executive or just starting out, our goal is to provide insights and inspiration to help you navigate your journey. Thanks for tuning in.
But here we are, you and me, Jeff. First recording of the Value Factory podcast. To anyone listening, to everyone listening, we are delighted to begin to share our story with you. I have no idea where this conversation is going to go. I know where it's going to start. It's going to start right here in the attic of the main office of OneAccord in Kirkland, Washington. There's history, there's story, there's future. We're just delighted to share this with you. Nick Anderson, CEO. Jeff Rogers, chair, founder of OneAccord.
Can we just call it the upper floor or the upper room?
Listen, so
it's not the attic.
It's not the attic. It's the upper room. Very good. Room. Well, if we could pan out, it looks like an attic. But if we take that upper room kind of idea.
But it was built in 1924.
Yeah.
So at that time,
right,
they used every bit of space. Right?
Every bit really of space.
Effectively, yeah. The coal chutes downstairs.
So. If we were talking about the upper room, we could talk about our trip to Israel and everything that we saw there. There's so much that we could talk about. Let's start though at our beginning.
Sure.
So we've been at this since the beginning of 2024, kind of officially.
Okay.
Unofficially, there was as you said, a crawl, walk, run.
Right.
Yeah.
Right.
But even before that, it was a decade prior that I met you and met OneAccord when I was in banking. And at that time, OneAccord had been, in existence since, is it 99 or 05? Where do we start?
Well, the official start date of OneAccord, if you looked at state documents, is January of 2005. We had been working since fall of 99 doing what we're doing, but we had maybe a partner all under the same business in really doing recruiting and staffing and technology firms, and finding that many of the firms we were serving, the processes and the structure, the clarity or lack of clarity was so apparent that we were asked to, solve a certain issue while looking over going, there's a whole lot of other things that are undefined. Kind of back in that day, if we build it, they will come.
Yeah.
And then they didn't come in 2001 when the market started to crash.
Yeah.
And that really evolved the side of the business of serving private business owners looking to grow their value, who thought I had an idea, I had a product or solution, and that would be enough. And all of a sudden it wasn't.
The way I tell this story as I try to recount the history is OneAccord started in this place of revenue generation and revenue growth. Even to you were ahead of your time. You shared with me a DVD. I might have it somewhere around here where you had sales training on DVD.
Right.
So
correct.
Like very few people were doing this back in the day, but you were doing it first, but that was revenue generation. And then I tell the story that, okay, we start getting people in the front door. You get the patrons in the seats of the restaurant, but then the kitchen's getting overwhelmed. Operationally, how do you handle this? And so there was another problem to solve. Is that accurate?
Yeah. And I'm, speaking actually a specific, company that we were serving where we were there because of a bank relationship. So backing up, Nick and I met each other through a relational community. Through a very trusted friend that we think the world of. And I think most client...
Shout out to Alan.
That's Alan. That most client business comes about through a relationship, where customer business can come about based on a search. I can go look and say, what's the best place to buy one of these microphones? And it comes up at Amazon and Best Buy. And I'm like, what's easiest? I'm not thinking about, who reps microphones, right? So in the banking world, as the consulting world and private equity and wealth advising, it comes down to trusted relationships. So Nick was introduced to me as a trusted professional in the world of serving private owners, yet you were leading a team of bankers into a segment. So you're really doing something very similar to what we were doing at OneAccord. You had a team,
Yep.
and you were serving around a specific area,
Right.
as was OneAccord. The little hiccup we had was an owner saying, we were introduced to the owner through a bank, and that company was peering at special credits where someone would help assist them in the running of the company, would be a kind way to say it.
That's very, very kind. Special credits is like detention for entrepreneurs.
Yeah, with the vice principal with a paddle with holes in it. Yes.
Yeah.
Not just like go chew gum over here, right?
No.
And so what we had seen is this company had grown from about 80, if I've got it right, 85 billion in sales to 74 million.
It's impressive growth.
Right.
The wrong direction.
Were all the costs to remain consistent. So all of a sudden now all their margins gone and so
Taking losses, yeah.
And when we did our client success plan, that first step of an audit or an assessment of a business objectively, it revealed that, interestingly, they had five product groups.
Mm-hmm.
3 of those 5 lost money every time they made a sale. But they had not, in accounting, they had not apportioned variable cost to, they just kind of kept variable and fixed separate.
Yeah.
And when you start to apportion it, they were losing money in each one of those.
They're putting more of the SG&A resources to different product lines or different areas, but it looks like they have decent gross margins, but some of those take more to service on overhead. Yeah.
Right. And so the 2 profitable business lines, and I know this is kind of an intimate story in the sense of getting really specific, but it actually lays out well numerous issues that we have the opportunity to serve owners through.
Well, I think, if we look at the history of the company, 650 organizations served in 25 years, people that are watching, listening, likely to resonate with some of these stories.
I would hope so, because there's elements of this that aren't necessarily direct for each company, but parts of this that probably are, right? So in this case, what happened is the salespeople, the 2 divisions that made money, were way backed up in their ability to fulfill orders. Okay, months. So if you're a salesperson, you're reticent to sell that product or service that you're not sure you can deliver on. And it would make the sales team and marketing team feel badly, because they would have upset customers, where the other 3 business units, they could make sales all day long.
Yeah.
So what was growing is losing money.
So they hire for a sales solution, and sales isn't necessarily the problem.
Right. So we identify this, right? And we brought in financial expertise, operational, and sales.
As you've told this story a time or two, you've told the story from a place of real humility, in that you showed up and said, we can fix the sales problem. I'm sure of that. The owner says, okay, but we have that other problem. Can you fix that? Yeah.
So what happened there was this recognition, and we met with the board to deliver our findings. I can still picture that upper room of a pretty good sized company here in the Pacific Northwest. I can see it. And as the board members said, the board makes a decision, then we'll call Bill, not his real name.
Yeah.
He actually makes the decision. So yes, he's having you present to the whole board, but he's actually going to decide as owner.
Yeah.
And he was shocked to learn that these business units are losing money.
Mm-hmm.
And so at that point in that meeting, he just looked at me and he goes, can you fix it? I said, what? He goes, the operations and the finance, but really the operation. which was broken in terms of manufacturing process. And I said, well, it'd be kind of, I guess, arrogant to sit here and say, well, yes, I can fix that without diving in a bit more deeply and also looking at the talent base. But I said, in essence, why? Like, why us? We're here for revenue.
Yeah.
Trust.
Yeah.
We trust you. You've been referred to us through someone we believe in.
Yeah.
And the work that we've seen you do thus far has objectivity, because in essence, what we were doing is talking ourselves out of the ability to do the engagement.
Yep.
Because we're brought in to fix something that wasn't the problem. And I'm like, you don't need help over there. You actually have a very good sales team. What you need help with is over here. That's not us.
Yeah.
And so that then was one of the pivot points in business, I think, is asking not what is it we do, but what does the market need?
Mm-hmm.
And then how can those match up?
Yeah.
So we realized, yes, we could be about growing revenue, but actually unprofitable revenue. I can argue that growing revenue can be very challenging, but growing profitable revenue is more strategic and more challenging, because you can do
Far more
things.
challenging.
Yeah, you can do things to juice revenue and juice sales.
I can spend $2 to make $1 in revenue.
Right.
I mean,
right. And you can incent salespeople in a way that's threatening or short term that won't produce lasting results.
Right.
So he came to us in essence and said, I want one throat to choke.
Somebody I trust.
One person.
Yeah.
And that company then turned around, grew within a reasonable time frame to over 100 million. And from what I understand, probably 20% higher than that eventually led to that owner being able to get the transition and the family to get the transition that ultimately they were looking for.
Yeah.
Right. So, but it was a remake of a process, not just sales, that led to that. Well, we found ourselves in a conundrum, right?
Yeah.
Here we are, all our website, our DVDs,
everything was revenue.
The book that we published, which was on Amazon, all the relationships that we had, which were hundreds of service providers in multiple states. All of a sudden, you have this other element. Do we want to go into that place or not? And I think many businesses have to ask the question, not only what are we, but what aren't we?
Huge question. And we had this conversation as I was coming in.
Very much.
Big question. So there's a monumental pivot.
Correct.
In the early years of OneAccord.
Mm-hmm.
First 5 years?
Technically from the founding, yes.
Yeah. So the origin, the founding was really focused on revenue and even some staffing and placement and other.
But it was really around revenue, sales and marketing.
Yeah. But found this opportunity, really responding to the market's need. Mm-hmm. Mm-hmm. When my boys were little, DVD players in cars.
They were the big deal.
Yeah. Yeah. And we would watch the movie Robots. And the theme of this movie is see a need, fill a need. And that's the beautiful simplicity in the market.
Right.
See a need, fill a need.
Right.
The humility of coming in with a revenue solution and then saying, well, actually, that's not the problem. There's something else here. Mm-hmm. Then the client asking, can you solve that problem? Mm-hmm. Brian Muchmore, our managing principal, and I had this conversation just last week about how important it is to do the discovery up front. Mm-hmm. So we have a client today, and they said, we want to hire you to fix this thing. And we said, great. Phase 1 is discovery. Nope, we don't want you to do that. We just want you to
We
fix
already know this is the problem, right?
Exactly. And, we just said, listen, if that's the way you want to go, we're not the right firm for you. Begrudgingly, they said, okay, we'll do the discovery. And we found things that nobody was aware of in that discovery. Right. And at the end of it, we said, okay, well, we're actually not going to do the work that we had originally proposed because discovery told us something that we weren't expecting.
You're making me think of two things as I'm listening. And the advantage of adult onset ADD
I've not heard of this before.
Maybe that you can go down one track and another track at the same time, but hopefully eventually get back to the main point.
I think in scripture they called that wisdom.
Is that what that is?
Yeah, sure. Let's go with that.
It seems like it was the personality of Peter, a bit impetuous, right? Thomas is probably over there going, hold on a minute. Wait a minute here, boy.
Yeah.
So, but you made me think of 2 points that I think are really salient for ownership and running effective organizations. So at the time you transitioned to leadership, and as we have talked, we were operationally public in that you were in the role, but it wasn't yet publicized. We waited several months to come out to the market and say Nick is in leadership. At the time that transition took place, roughly, I think OneAccord has had about 600 total clients. Is that right? Between the nonprofits and for-profits. Yeah. And since that time, it's closer to 650.
That's right.
Okay. So in those first 600 I'll address, you mentioned doing discovery, which we call a client success plan, right? There, of the ones that were problematic, that didn't go like we would have liked them to in our eyes or the client's eyes or both, there was one commonality out of the first about, let's say, 200, 4 had the same attribute. That attribute was that we went in to do what the client asked us without doing a client success plan first. They knew what the issue was. We believed that we knew the issue, or the principal working on it felt like, hey, here's an opportunity. I'm going to slide right in and solve this problem. Okay. All 4 of those, it ended up being a symptom, not the problem.
Yes.
So now you're on an engagement. You're faced with seeing this reality in a business, and yet it's not what your scope of work says. It's not your contract.
Yep.
What do you do? Right?
I mean, that's a precarious position at best. Yeah.
So at kind of the surface level of the 2 points, point number 1 is the importance of having objective views and discerning the health of an organization, and really looking at the leadership and the mission and the vision and what the strategy is. Does the structure align with the strategy?
Yeah.
What's the business structure itself based on the outcome that you want? Even down to, should you be an S Corp or a C Corp based on some future transition of leadership or ownership? All these kind of questions, right?
Yeah.
And so what we found was the importance of that diagnostic process, which OneAccord does in a fraction of what most companies would do in terms of both time and cost. Right. So it's a very quick turnaround, but we never had a client that we did that with that didn't then align in terms of what the outcome was for years. Now, there's some other learning since of other things that we've figured out that are also important ingredients. But at just the outset level, there's that. Now, there's a second point that I think is actually more important, and that is when we determined that the issues that the company is, or even nonprofit, are facing are problematic in our ability to communicate them, or offensive, or may even take us out of contention. So what was the case of that manufacturing firm was, we were basically talking ourselves out of being able to do an engagement, right? And had we not taken the time to determine our core values as an organization, I think there's a lot of stumbling along the way, because people would be looking at opportunities through different glasses. So by defining clearly who we were as an organization, actually made it very simple, not easy, but simple to make the decision to say, this is a no. And then now, how are we going to communicate it? So key elements.
Our friend Ishmael that does strategic planning and coaching uses the language of a filter. You have to run decisions through a filter, and it's a yes, no, and a big bucket of maybe. The no's are easy. The maybes don't violate the core tenets, the core values, the makeup of the mission, and so forth, but they need to be wrestled with. Few of them are immediate yeses.
Right.
But the no's, it's easy to filter out. I want to share with our friends and watchers and listeners the story of your and the early days.
Yeah.
Even though we're kind of in them.
Yeah.
We've been at this together officially for a year. We've known one another for, since 2010, I suppose.
Is that when it is?
Yeah.
I could go back in my notes and hopefully I've kept accurate notes on most contacts, but it's been a long time.
I think I showed up in this office the first time around 2010 as a banker coming to a mixer event.
Okay.
In the evening. In fact, I'm not even sure you were here. Scott Smith may have been.
Okay.
I had gone through a leadership development program with.
I wasn't here.
Yeah.
Because I'd remember you.
Well, I remember clearly sitting in a chair, looking around the room. Randall Dick was there. Scott was there. John Kaminsky was there. All guys that we're still in, communication and relationship with today. And I said, these guys are really cool. Like what they do is really cool. Maybe I could do this when I grow up. I remember having that thought.
Interesting.
Yeah.
You and I sat outside together at the Belfield Office Park.
Yeah.
Post an event that was a send away for Alan as he was moving to another area, even though his roots are here. And as I listened to you, this very strong conviction was in me about you are a leader. And I said to you,
I remember,
you should be in a leadership role. And I asked you a question, which is very respectful to everybody in the industry.
Yeah.
Because we couldn't do what we do in business without great bank partnership relationships. And we've worked with a lot of different banks, and some we're customers of and some we're clients of.
Right.
And the client relationship is invaluable for most businesses at some point. Not everyone maybe, but most businesses are going to get to a point in something where that relationship is going to really matter for them, right? So I have great admiration for people in that vocation. But I looked at you and I remember it was a sunny day and I'm like, I just said, why are you a banker? Now, my caveat to that would be, because I said you should be a CEO.
Mm-hmm.
You should be running an organization. I didn't at any time in that conversation be moving towards a reality with OneAccord, but I did actually think of it. I thought if I had someone that I would think could run our business and continue it, it would be someone that has the attributes of leadership that Nick does. So I remember thinking it actually at that very first time. But my question to you is not that this isn't a good role,
right? But
it seems like you should be CEO in that case of the bank. That would make more sense to me.
Funny story on that one. So I went to banking school, Pacific Coast Banking School.
Which is great.
It's an excellence.
Yes.
Best in the country.
Yes.
Best in the country at developing executives for banks. I went to school to become a bank CEO. And living through the global financial crisis, the Great Recession, and seeing what life was like for CEOs in that kind of environment, I changed my mind.
You developed empathy for those that are in it, right?
I mean, listen, bankers live a good life. No question about that. But in the toughest times, the movie It's a Wonderful Life has appealed to me on a level that is way beyond just a holiday movie.
Because
I'm George Bailey in my core, right? I want to be the guy that starts handing out $20 bills and saying you're good for it, right? And the bankers today live in an environment of extreme regulatory constraint. It's
Correct.
just
Correct.
And there's very little that an FDIC insured banker can do without following an external set of guidelines.
Right. There's not much latitude.
There really isn't.
Yeah.
And I understand that too. They're loaning they're loaning my grandmother's, my aunt's money. They have to do so safely and soundly. And yet, I just know that I have too much of an entrepreneurial streak. My risk tolerance is different. Yeah.
Right. So, and I saw that in you. Yeah. Right. I'm like, that's why, why are you, I'm just curious.
Right. So I would have, had I stayed in the banking industry, I probably would have found myself in investment banking or on the buy side, private equity. So this was my funny response to you that I remember. Because it took me a little courage and I had to say, okay, well, let's test this out. But later on, knowing that OneAccord is a consulting firm, but really we're operators. Mm-hmm. We put operators into companies.
Right.
So I came back to you and I said, okay, Jeff, I want to buy a company with your money. And I said that jokingly in the sense of, there's a private equity opportunity. I'd like to be CEO, minority owner, leverage private equity, kind of a leverage buyout. And I knew that you were involved in some of that at that time. I didn't even mean OneAccord when I said that. I meant some future portfolio company. So you were, and I was thinking, and then here we are, right? But there's some fill in that actually.
And by the way, it could have gone that way too, because perhaps timing here wouldn't have been what it is, and maybe I would have seen another company that you would have stepped in. But I would say, in an attitude of plenty versus scarcity, my hope would have been that whatever would have been a best opportunity for you at that season, that's what I would have pointed to. And I think I would easily have pointed you to a portfolio company or a client company too.
Well, I appreciate you saying that.
Yeah.
Where we are is pretty awesome. But on that, I think it's important for us to clearly air to the market on what OneAccord is doing these days. Mm-hmm. You've said it, I've said it at least, a dozen times, right? 144 times for each of us, I'm sure. And yet it's a story that needs to be told. And that is, OneAccord is at its root, at its core, consulting. Revenue, operations grew from there. Consulting was the core. And then in the 25-year history, there were opportunities to buy some companies. Mm-hmm. Like I just said, I want to buy a company with your money. I want to be the minority, and just, to get to the punchline, we're no longer buying companies under the umbrella of OneAccord. We're not a private equity firm.
Correct. Along
the same lines, there were opportunities where clients asked us if we could take them to market.
Correct.
And so OneAccord had stood up an investment bank.
Right.
And we would sell some companies.
Correct. And did.
Punchline, we're no longer doing that.
Right.
There was an interview that I watched with you on CEO to CEO, where you would say, at OneAccord, we buy companies, we sell companies, and we consult with companies. And at the time, that was true.
Correct.
But today, all we're doing is consulting with companies.
Right.
That's it. And that was an agreement that you and I made before I came on in January of 24, to get really clear.
So, as I listened to that, and you did bring in a level of clarity into the team and now to the marketplace, that even this is exemplary of the fact of trying to make sure that we're adding value to the marketplace, because that's our, going back to something that we talked about earlier, knowing who you are and not. So knowing your mission and your vision. Well, our mission statement, building value, built on values, right? So building value for whom? Everybody in the community or the ecosystem that you're dealing with, right? The client for sure, their stakeholders, right? Their customers, for the OneAccord team, for the community it's a part of, right? So you're trying to build value built on values. Well, then you better know what your values are.
That's right.
And in our case, they're truth or absolute truth, right? Service, and really, you could say grace, but it's compassion. So there's truth to serve, but with a compassion, right? A peace. And I would describe it this way: is truth is not that hard to define. but it's aspirational in the sense we all have a selfish streak and self-interest, right? That makes us much stronger and safer in partnership with other aligned people that will hold us to that, because as an individual, we run risk by ourselves. That's even why having an independent client account manager, someone who's not compensated based on the necessary engagement itself, but is in a role independently, right? So we endeavor to live out of truth, but compassion is delivering things in a way they can be heard or understood. Because you can have the truth for an owner and you can see it. It can be very blunt. But you have to ask, do they have ears to hear?
Yeah.
And is it the right time and the right way?
Yeah.
That's where being an experienced operator versus, oh, I have an MBA and I've studied this and I've done case studies. But we have to take experienced leaders who have an empathy from sitting in that seat, right? And knowing what that feels like.
Boy, as a banker, I had a lunch with a guy named Mike Vanderslice.
I know Mike.
Yeah.
Sure.
And I have not seen Mike since this lunch that I would say is 20 years ago.
Okay.
Could be. And Mike said to me and my boss, so I was the junior kid coming along for the ride. And he was saying to my boss, eye contact there, but the message was to me. He said, bankers just will never understand what it is to be an entrepreneur, because you don't know what it's like to be, up at night on Thursday when payroll's due tomorrow and there's no money in the bank account. And I knew he was talking to me. He was giving me advice as a young banker to have empathy for the operator, to know and understand. Right. You know how I responded to that? I want to feel that. I want to feel that responsibility. Not that I want to know what it feels like to have an empty bank account, but figuratively, I want to be in that space, because the entrepreneurs that figure that out are like my heroes, more than a baseball player, more than a football player, more than a musician. The entrepreneur that figures out a way is like my hero.
Yeah, to keep going.
To run the race, run to win, fight the good fight. It's all there. It's in the book. And I just love it. I don't know. I got
a good friend of mine. His name's Steve. And Steve's an actual person that runs a very well-known company that the latest valuation I've heard is over 100 million, and fairly significantly north of that. And there was a season when he started this cabinet business out of his garage that the market went upside down, and his banker, attorney, accountant, wealth advisor all told him, shut it down, declare bankruptcy. And I'm not saying there might not be a place for that, but he didn't do that. Yeah. And he worked to repay all his creditors. And, where that inner conviction of, I don't know what quit is. Yeah. Like I may die trying, but I'm still trying.
Well, right? I'm delighted to say that Steve is a new friend of mine too, having spent a couple of weeks with him internationally in a service.
Yeah. Yeah. And you saw that character there too, right?
Oh yeah. 100%. To walk alongside this man, to, spend hours on an airplane and nights at dinner and hear the stories. And entrepreneurs are my heroes.
You said something that, it struck me, Nick, and a month ago it wouldn't have probably come out like it does now. And that was, you knew you wanted to be able to feel what that person was going through, right? Mm-hmm. To have that empathy. You and I were recently in Israel.
Yeah.
And when friends ask me about, why would you go to Israel? Coworkers, I said, well, I want to see firsthand what's going on, not what the media tells me.
Right.
That was my initial. But our trip, I would describe, and we've talked about this, was really about people sprinkled in with places, where most people go to Israel to see places sprinkled in with people. Mm-hmm. Right. And my prayer as I was going, and that I told some friends for accountability, is I want to feel what's going on, not just see.
Yeah.
So when we were at a certain site, which tragedy took place a little over a year ago. And I saw this wall of a gas station peppered with little signs, like bumper stickers, hundreds of them, right? And I'm like, what are those? Well, those were the faces of people that lost their life that day, right? But then I took a picture of that door, and then I stepped closer and I took a picture of 4 of them. And then I took a picture of one of them, and then I zoomed in on the person.
Yeah.
And that was someone's son, and then there was a daughter. I took one of each, and they're in our shared album, right?
Yeah.
As I wanted to feel that individual. And when we work with business owners and they're thinking about some form of transition, I have found that while the money matters and we're able to architect structures that allow for significant financial gain for the owner and their family, most the owners that we talk to also talk to us about the people on their team and their
That's
employees.
what they lead with.
Right?
I got to take care of my guys.
I want to take care of my people.
Yeah.
Right?
Yeah.
And it's Sally and Mike and Alberto, right, that have been with them, that really matters. So again, it's about the people and the relationship, right? And stewarding that. So what we're trying to help architect for them is an and, not an or. How do you take care of your people and their future and be able to benefit greatly? When I think a lot of people that are in the M&A space are in the transaction mindset. They're about, how do I get the most for the transaction?
Yeah.
And it has very little consideration for the bigger picture, because that is not actually how they're trained.
Well, and if we consider it takes, all parts of the body come together, on some level, that's okay. The deal makers need to make the deals.
Correct.
Because they can achieve that objective.
Absolutely.
But if they're the only ones, then the scales are tipped in the wrong direction. If we're not, our client Bob, even though his name's not Bob, but they're all Bob. But this is a young Bob. It's a young Bob contemplating the exit. And okay, you got a lot of runway, but we'll write the business plan. I'm also going to require, with your permission, his permission, that we meet with his financial advisor and a CPA and attorney for family tax planning, for multi-generational, so that Bob doesn't end up with, a regret. Right. And I think the statistics, our friend Homer shared this when we held a workshop just this fall at Park Place. And I'll get the numbers wrong, but it is some order of magnitude, like only 20% of owners are able to sell their company on the timeline at the price with the terms, or even maybe it's even sell their company the first go round. And then 5% of that 20% are satisfied with the outcome. So of all the owners that want to sell their business, only 2.5% or some.
I think your numbers are right, because I remember it being 2%.
They're close. I think the bottom line was, I don't know how he backed into the numbers, but 2 or 3% of owners who want to actually sell their company, which is a big decision, right?
Mm-hmm.
I think of some of the folks that we work with that are in their late 50s, early 60s, and they're selling a company that they founded 30 years ago. Mm-hmm. It's their entire identity.
Or maybe it's a generational business.
Right. And there isn't
2-3 generations. Right. Yeah.
Huge. I'm identity, purpose in life. What do I do for the next 40 years of my life? I had this thing. This was, this was all day, every day. It consumed me, and I'm giving it up. Without thoughtful consideration, without all parts of the body coming together, you need the deal maker to get the most money possible, for sure. But we have to pay attention to the long range family planning. We have to even bringing in someone to work with the owner around what's the purpose of my life for the next 2, 3,
like
4
a coach.
decades.
And sure.
Right. Okay. We've been talking for over an hour now. This is the first of what I hope to be many episodes in the Value Factory. How How should we wrap up? How should we conclude?
There's something you said midstream, maybe that's a good bow. You came into an organization called OneAccord, and when we go back to the original name, so it's interesting when you found an organization, what things do you put in place? And a lot of professional services organizations have names after founders. And I just didn't want that because I wanted there to be a greater legacy than any one person, right? But if you think of the name of OneAccord, right, the opposite of that is discord. And when you see organizations that are struggling, I find they're in discord, right? There's a lack of alignment in terms of where you're trying to go and sometimes how you do it. And so the opposite of discord, and the first time I saw it was actually in scripture where it talks about be of one accord, but it's not really a biblical term. If you go back to its original meaning, right, it's of one mind, one spirit, a direction, an alignment. And so you came in to leadership saying we have these 3 businesses under one accord, but I would say they were in discord in the sense of the marketplace not clearly knowing who we are and who we're not.
Yeah.
Right? So if you have a group that's acquiring companies and a group that's helping to sell companies, and the primary business of consulting, helping operationally companies to get the value that they want, then all of a sudden people knew us in this marketplace for the way they engaged.
Yeah.
Right. So if it was part of a sell side transaction, that's their view of OneAccord. But if it was part of an acquisition that a group of us did under the banner of OneAccord, but as investors, and that seller knows OneAccord, that seller knows OneAccord as an owner operator. Now, here's what I think: you're the right person at the perfect time. And here's partly why. The asset that confusion for the marketplace brought about is the fact that as operators now clearly in consulting, we have actually sat and helped companies go through the sale process. So we know exactly what buyers are looking for.
Yeah.
And we also know the red flags. I don't think there's anybody else in the consultative space, at least there's not anybody I'm aware of, that one has that experience. And in 2, we actually put a group of investors together to acquire businesses. So we also know what it's like to be in the shoes of the buyer. And I would say most importantly is not an acquisition. And that's what people set their sights on, but that to be that 2%, how do you have a really happy, joyful seller and buyer? Because 1, 2, 5 years down the road, it's meeting or exceeding what both parties had envisioned.
Yeah.
And until you've actually sat in that seat and done it, I think it's hard to understand what that current business owner should be doing to optimize their exit value and maintain or develop their legacy further in their family and their community. So right place, right time. You came in and cleaned up a message of buy, sell, operate, which had inherent conflict of interest within it to certain parties in our ecosystem, like other investment banks. Right? They would see that as competition, and it was. So why would you bring something to OneAccord as an investment bank to take it to market if we have an investment bank also?
And today we know what it's like to get stuck with a hung deal. We know what it's like to encounter owners that aren't ready and what they need for prep. So we're better equipped to serve our investment bank partners having had that experience.
Absolutely.
Yeah.
Or to talk to an owner about what that transition feels like and how it could feel good or not good.
Right.
So the asset of that coming out of COVID and trying to clarify who we are and who we're not was based on some experiences that were more than just subjective. They were objective because we'd actually done it.
Yeah.
Right. So we went through that, and you brought this clarity to say singularly, this is what we do. this is the direction we're going. But historically, we're able to leverage that with our team, right? And there's some of our team that went on to then run in ownership companies that are not part of OneAccord anymore, but they're great alumni.
Yep.
Right.
And some alumni that have stood up some investment banks, and we're good friends with those guys.
Exactly. Exactly.
Yeah. It's a great legacy of 25 years of really building value, built on values, actually.
Amen.
Amen. Well, listen, this is, like I say, the first of many conversations with OneAccord's founder and chairman, Jeff Rogers, and myself, Nick Anderson, CEO. We call this the Value Factory. What we're focused on is building value built on values, delivering value for all of the stakeholders that are involved in any engagement that we might come into contact with. So we hope you enjoyed the conversation and welcome you back next time.